Thank you for following Knockout Crypto. Thank you for following our channel. I want to go over this because tomorrow's a big day in crypto. You can follow Knockout Crypto on Instagram, Twitter, and YouTube. We have trading alerts and the next big crypto report there at knockoutcrypto.com. Okay, so today I want to go over the NYSE owner to launch longer rated Bitcoin futures. This was an article just posted on the Wall Street Journal. Wall Street Journal is probably one of the most credible sources. And today they posted this article about the Intercontinental Exchange bets consumers, businesses, and Wall Street will embrace cryptocurrency. Think about that for a minute. The owner of the New York Stock Exchange believes that consumers, businesses, and Wall Street will embrace cryptocurrencies. Is there anything more bullish? This is just really bullish news. So let's go right into it. But guys, I mean, this is what Bitcoin has been waiting for the past 10 years to be legitimate. And the New York Stock Exchange's owner is saying, hey, they believe that consumers, businesses, and Wall Street will embrace cryptocurrency. If that don't get you excited about cryptocurrencies, I don't know what will. That is proof, 100% proof that here are really smart people. You know, these are Wall Street people. The person who owns the New York Stock Exchange, really smart people, really intelligent people. You know, these are the Goldman Sachs. These are the big boys, and the big boys are saying, hey, they think that cryptos will be embraced in the future. That makes me very bullish on cryptocurrencies, especially Bitcoin, especially Ethereum. Just makes you really bullish on cryptocurrencies. All right, guys. So let's keep reading this article here. All right, let me go to the next paragraph. This article is by Alexander Opipovich. This article came out September 22nd, 2019 at 8 o'clock a.m. So it just came out this morning. The owner of the New York Stock Exchange is set to launch its long-delayed market for Bitcoin futures Sunday, a high-profile bet that consumers, businesses, and Wall Street will embrace cryptocurrencies. The exchange parent company, Intercontinental Exchange, Inc., plans to open trading of its new Bitcoin futures at 8 p.m. EDT, which is Eastern Standard Time. Futures let traders bet on whether underlying markets such as oil, gold, stocks, or currencies will rise or fall. The new futures are a part of a venture called Bakkt, whose ultimate goal is to make cryptocurrencies sufficiently transparent and regulated for individuals to use in retail purchases. Bitcoin has failed to gain traction as a tool for payment, in part because of its extreme volatility. If successful, ICE futures could make it easier for merchants to protect themselves from swings in Bitcoin prices. Investors in Bakkt include ICE, Microsoft's venture capital arm, and Boston Consulting Group. In addition, Starbucks Corp has teamed up with Bakkt to develop ways to let customers convert digital assets into dollars for use at its coffee shops. With the launch, Atlanta-based ICE is challenging its longtime rival CME Group Inc., which introduced its own Bitcoin futures in December 2017. More than $200 million worth of CME futures change hands on an average day. Chicago-based CME said Friday it would expand into Bitcoin options early next year. Historically, exchanges have struggled to attract trading in new futures contracts after similar contracts have taken off elsewhere. But ICE is betting that a novel contract design will draw businesses to its futures. Traders who hold the ICE futures until they expire will either be paid in Bitcoin or deliver Bitcoin to Bakkt to settle their bets. Such a process called physical delivery is used in such markets as cattle, metal, and cocoa futures, but is new to Bitcoin. Many traders argue that physical delivery ensures a tight link between future prices and the price of the underlying market. I'm going to read that again slowly so you guys catch what's happening here, okay? Traders who hold the ICE futures, I'm going to highlight this sentence. Traders who hold the ICE futures until they expire will either be paid in Bitcoin or deliver Bitcoin to Bakkt to settle their bets. So if you have to deliver Bitcoin to Bakkt to settle your bet, that means that you have to buy Bitcoin. If ICE is going to pay you in Bitcoin, that means that they have to buy Bitcoin. So you have two entities here buying Bitcoin. The only thing Bitcoin can do is go up because you have more people buying Bitcoin. So Bitcoin is going to go up. Such a process called physical delivery is used in such markets as cattle, metals, and cocoa futures, but it is new to Bitcoin. Many traders argue that physical delivery ensures a tight link between futures prices and the price of the underlying market. CME futures are settled with payments in US dollars, and traders who deal with them don't have to handle actual digital coins. Bitcoin has more than doubled in value since the beginning of the year and was trading at $10,145 on Friday afternoon. I'm going to read that again just in case you're kind of not sure if Bitcoin is a good investment. Bitcoin has doubled in value since the beginning of the year. The beginning of the year, Bitcoin was around $5,000. Now it's $10,000. Bitcoin has doubled in value. Name an investment that has doubled in value this year. Its rebound is a surprise to many after collapse of a speculative bubble in Bitcoin that peaked in late 2017. The launch of physically settled futures from Bakkt has been one of the main narratives behind the monster Bitcoin rally during the first half of the year, said Marty Greenspan, senior market analyst at brokerage eToro. Sunday's debut comes after months of delays. Bakkt initially planned to go live last November, but the rollout was repeatedly pushed back as ICE struggled to get regulatory approval from the U.S. Commodities Futures and Trading Commission. One potential problem for Bakkt is that only a handful of clearing firms, which allowed traders to access the futures markets, were expected to support the new contract initially. Goldman Sachs Group, for instance, doesn't plan to clear ICE Bitcoin futures. According to a person familiar with the bank's thinking, Goldman is one of the biggest clearing firms in the futures market, and it clears CME contracts for some clients. That means traders must use smaller clearing firms willing to provide access to ICE Bitcoin futures. It provided a good opportunity for us because many of the big banks have shielded away from the products, said Bob Fitzsimmons, an executive vice president at Redbird Securities, a smaller firm that plans to support the new contract. Mr. Fitzsimmons said that he has brought on more than a dozen clients to trade ICE Bitcoin futures, including hedge funds and Bitcoin miners. Bitcoin miners create new units of the digital currency, and they could use ICE contracts to protect themselves against the risk of Bitcoin losing value, much as oil producers use futures to hedge crude prices. Bakkt Chief Executive Kelly Loeffler said in an interview that there was substantial interest in ICE Bitcoin futures among clearing firms, and she expected the number of firms clearing the contract to grow over time. Expectations for the launch are high, largely because of the reputation of ICE and its CEO, Jeffrey Sprecher. Since founding ICE in 2000, Mr. Sprecher has built it into an exchange empire worth around $52 billion by making investments in new technologies. A hallmark has been acquiring futures markets with old-fashioned trading floors and turning them electronic. Anyone who's followed Jeffrey Sprecher's career and the trajectory of ICE has to acknowledge that anything he does needs to be taken seriously, says John D. Anasco, a former executive with New York Mercantile Exchange. Earlier this year, Mr. Sprecher described Bakkt as a bit of a moonshot bet. Mr. Loeffler, the head of Bakkt, is a former ICE executive, as well as Mr. Sprecher's wife. So this guy, the CEO of Bakkt, is highly successful. He has built an exchange empire worth $52 billion by making new investments in new technology. A hallmark has been acquiring futures markets with old-fashioned trading floors and turning them electronic. That's what he does. So he sees that cryptocurrencies could be the moonshot bet, but if it works out, it could be a tremendous boost for the economy. And he's betting that people will embrace cryptocurrencies. So that was Wall Street Journal. I want to go back to another article that is in Fortune magazine. So Fortune magazine is another credible resource. Will the Bakkt launch help Bitcoin go mainstream? And that comes from Sean Tully, and this article was posted September 20th. Okay. So on September 22nd, a product designed to remake Bitcoin as a mainstream investment for the world's investment managers will go live. When ICE Futures, one of the world's largest commodity markets, opens trading at 8 p.m. Eastern that day, it will offer Bakkt daily and monthly Bitcoin futures, the first physically delivered cryptocurrency contracts ever traded on a federally regulated exchange. If the exchange works as planned, it will give institutional investors a secure, well-monitored place to trade Bitcoin, the world's most widely used cryptocurrency. That in turn could help alleviate the problems with volatility and trustworthiness that have kept Bitcoin from being more widely adopted, giving the asset a major boost in legitimacy. With the Bakkt futures, endowment funds or brokerage firms that trade the contracts will be able to channel their payments and secure a guarantee that their Bitcoin will be delivered through the same ICE clearinghouse that protects settles contracts traded by global oil giants. The newly purchased tokens will be stored in super secure warehouse overseen by the same team, deploying the same cybersecurity measures that safeguard their equity trades on the New York Stock Exchange. The venture behind this effort to red tradition and disruption to bring blue chip asset managers off the sidelines to embrace cryptocurrency is Bakkt, so called because it is backed by the majority owner Intercontinental Exchange. ICE is the $52 billion market cap trading colossus that owns the New York Stock Exchange, New York Stock Archer, the world's largest platform for EFTs, ICE Futures US, one of the dominant players in agricultural commodities, ICE Futures Europe, home of the bread the Brent crude contracts at the leading benchmark for world oil prices. Bakkt is the brainchild of ICE former and CEO Jeffrey Sprecher, long leading figure in transformation of major exchanges from open outcry venues dominated by rowdy floor brokers to today's electronic marketplaces. Bakkt CEO was Kelly Loeffler, a Sprecher lieutenant at ICE over 17 years, as well as Sprecher's wife. Bakkt debuted with great fanfare in August 2018, unveiling a group of investors and partners led by ICE that have so far invested $182.5 million. That group includes Microsoft's venture capital arm M12, hedge fund Panera Capital, billionaire money manager Alan Howard, and Starbucks. Trading was initially expected to begin last December, but that timetable proved too far optimistic. The federal government shut down in December, and January delayed talks with Bakkt's main regulator, the Commodity Futures Trading Commission. The CFTC also reportedly took time mulling whether to oversee custody of digital assets, but so far hasn't committed to taking on that role, further extending the approvals process. Meanwhile, the Bakkt buzz receded, and the news that the prestigious consortium, including Facebook and Visa, plan to create a global cryptocurrency named Libra stole the headlines. Now, Bakkt is back. Despite the delays, its product will beat Libra to the market and will start trading before completing contracts planned by LedgerX and ErisX. Bakkt secured approval from the CFTC in June and cleared the final hurdle on August 16 when the New York State Department of Financial Services granted a charter for creation of a trust company as its vehicle for custody. Over the past few days, Bakkt granted Fortune exclusive interviews with Sprecher, Loeffler, CCO Adam Wright, and other executives, including in-person talks at Bakkt's main office, a glass cube, and an office building near ICE modest headquarters on the outskirts of Atlanta. Making Bitcoin more popular. The Bakkt brass has stressed that their immediate goal is making Bitcoin a popular alternative investment along with gold and private equity, but an efficient regulated market in the currency could eventually remake the way we pay for everything from coffee to airline tickets. The funds that trade on exchanges expressed to us that they do not want to deal in today's unregulated markets and want to end federal oversight on the level of the New York Stock Exchange to feel safe trading Bitcoin, says Loeffler. Add White. Pension funds, for example, are diversifying into alternatives. Regulated Bitcoin futures could be a part of their investment mandate since they have different correlations with both stocks and bonds and other alternatives such as gold. Other hedge funds, family offices, and Charles Schwab or TD Ameritrade of this world embrace Bitcoin. The gigantic trading volumes in the Bakkt contracts should smooth the lurching pricing swings that scare both investors and would-be users, creating a stable, trusted currency. If and when that happens, it's not hard to imagine that Bakkt will create a Bitcoin app for retail purchases. Bakkt hasn't shared its plans for retail payments publicly, but acknowledges that its partnership with Starbucks suggests big plans in the future. It also is in talks with other consumer brands looking to use digital currencies for consumer payments. After all, the big fees that credit card companies and banks extract from merchants are ripe for disruption, and Sprecher, a past master at making an array of transactions faster and cheaper. For now, Sprecher tells Fortune whether asset managers will transform strong interest into action is highly uncertain, creating an aura of suspense around the launch. It is not demand yet, but it is intense curiosity, he says. It's the sense that money managers want to be at the forefront of this train and not left out. The day-to-day news covers Bitcoin when the price goes up or way down, but underneath we see sophisticated people investing in infrastructure and compliance that's unrelated to the price. But they won't use that infrastructure. There won't be true global acceptance until we can build out the rails in a regulated manner. It will take weeks or months before Bakkt's Wall Street audience judges this production a hit or a flop. It's like opening night. Everyone's nervous. Regulation less scary. Whether what Sprecher describes as somewhat of a moonshot succeeds depends on Bakkt's wager that traditional regulation is the bridge that will lead money managers to Bitcoin. It's easy to see why endowments and pension funds view the crypto world as dangerous. In short, the industry lacks uniform, rigorous federal oversight that safeguards America's securities and commodities futures markets. A recent study by Bitwise, the crypto asset management firm, found that 95% of the trades on digital currency exchanges were fraudulent, meaning they were designed to inflate volumes of prices not for legitimate transactions between customers who want to buy or sell Bitcoin. Among the fraudulent practices are spoofing, where traders have no intention of buying but enter phony orders to manipulate prices. Theft and loss of digital assets have been rampant in the industry, and responsible fiduciaries are dissuaded from participating as a result. U.S. authorities have deemed Bitcoin a commodity, and hence it falls under the jurisdiction of the CFTC rather than the Securities and Exchange Commission, which regulates securities. But the CFTC does not grant a license to operate a spot commodities market that trade oil or soybeans or currencies where the physical commodities are bought and sold instantaneously for cash. As its name suggests, the CFTC's domain is commodities futures, derivative contracts maintaining payment from, say, a refinery to a seller of crude oil for delivery of the fuel at a future date. Currently, Bitcoin futures do trade on the Chicago Merchanttown Exchange, but unlike the Bakkt daily and monthly future, these futures aren't used for purchase or sale of physical Bitcoin. The CME futures settle in cash, not Bitcoin tokens, based on the change of a Bitcoin price index that's pulled from the spot market. Outside of those CME futures, cryptocurrencies have been trading on spot markets that aren't classified under federal rules as exchanges, but in most cases hold money transmitter license issued by the states in which they are domiciled. Investment firms are clearly less comfortable with the fragmented oversight of these multiple trading venues than the rigorous, uniform standards posed by the CFTC on futures trading. More than 200 crypto platforms dominate trading, establishing their own prices. As a result, Bitcoin doesn't have a definite centralized price. It's just that benchmark that Bakkt aims to provide. In a CFTC-regulated futures market such as ICE, U.S.-only broker-dealers and futures commission merchants that are members of the exchange are permitted to trade. The trading records and capital reserves of those members are carefully vetted by the exchange, and the vetting is overseen by the CFTC. Those firms are also members of clearing organizations. If ICE Clear US, in the case of ICE Futures US, that route payments between buyers and sellers and shield participants against losses. For any contract traded on the exchange, if the buyer fails to pay, the clearinghouse imposes protocols designed to make the seller whole. If a producer purchases an oil or soybeans contract and the seller defaults, the clearinghouse arranges to reimburse the buyer. The clearinghouse for futures are also licensed and supervised by the CFTC. Bakkt's coup was creating a futures contract that trades like a spot contract. By purchasing daily futures, a buyer gets physical Bitcoin delivered to his or her account the same day, just as on a spot exchange. The difference is that the Bakkt product boasts all the advantages of rigorous CFTC regulation of trading, clearing, and the ability to use margin for leverage that money managers prize. The Bakkt monthly Bitcoin futures will establish centralized prices extending 12 months into the future. It's likely that Bakkt will soon face plenty of competition. LedgerX and TD Ameritrade ErisX, two prominent crypto trading firms, have won recognition as fully regulated designated contract markets from the CTFE. They plan to launch contracts that will vie with the Bakkt contracts in trading physically delivered Bitcoin. So what is Bakkt? Custody is key. Custody is key. What's Bakkt's edge? Bakkt is banking that the trust big customers harbor for ICE will extend to its offspring, and that piggybacking on ICE technology will create an ultra-safe vault for storing digital assets. The safeguarding of stocks, bonds, and commodities such as gold from theft is known as custody. Ironclad protection is especially essential for cryptocurrencies. If Bitcoin is sent from the owner's wallet to the wrong digital asset and the recipient has a private key, he or she keeps the coins. There's no way for the owner to get their money back. Likewise, you'll never get your tokens back from the thief who hacked into your Bitcoin wallet. It's important to recognize that CFTC hasn't traditionally regulated custody. Contracts such as oil futures are either settled in cash, or the crude or coin is shipped to the buyer's warehouse. Gold and silver are held in massive vaults, frequently owned by banks or third parties. Mainly digital trading platforms provide custody, but few operate as qualified custodians. A designation often required by asset managers. The exceptions are a few operators that obtain trust bank charters from one of 4 states: New York, South Dakota, Nevada, Wyoming. The warehouses operating under those state licenses are required to meet strict capital requirements, as well as anti-money laundering, AML, and know your customer security protocols. Bakkt operates under the New York charter, and rivals Gemini, run by Tyler and Cameron Winklevoss, and Coinbase also established custody as New York Trust. ICE does not provide custody either for securities or commodities, but it commands strong fraud detecting tools to protect trades on its exchanges and shield payments in and out of its clearinghouses. At the Bakkt clearinghouse called Bakkt Trust Co., ICE is deploying the same cybersecurity systems that buttress the NYSE. Unless the client wants to shift tokens from Bakkt's trust for a storage at a rival site, the transfer of Bitcoin from one customer to another all happens inside its warehouse. If a client A sells 100 tokens to fund B, the transaction happens on ICE Futures US, but Bakkt simply credits client's B account for 100 coins via an entry on the centralized warehouse ledger, debits A account, and channels the cash to A through ICE US. The Bitcoin moves around like a stack of lumber, moving from one part of Home Depot to another, but never leaves the warehouse. Since all balances are settled on the internal warehouse ledger, the futures transaction avoid running on the blockchain, where Bitcoin could be sent to the wrong address. It's like transferring cash from your checking to your savings account, all at your own bank. With ICE help, Bakkt also has installed Fortress-like protection for Bitcoin that leaves the warehouse for, say, the owner wallet. The vast majority of Bitcoin in Bakkt's warehouse is stored in what's known as cold storage. To leave the warehouse, the Bitcoin must move from cold to warm storage, then exit via electronic transfer over the internet. Warm storage is connected to the internet so that the coins can be sent from Bakkt's trust to another exchange or the wallet. Cold storage parks Bitcoin in the deepest deep vaults, disconnected from the web. Nothing is approved automatically. For Bitcoin to go from cold to warm, multiple people in 2 or more offices at Bakkt or ICE must sign off after applying cybersecurity protocols that protect everything from oil to ETF trading. Then the move from cold to warm requires approval from several additional members of the security team, along with other proprietary processes for authentication of identity. A combined team from ICE and Bakkt are now in place to handle these sign-offs, and their ranks should grow when trading begins. The question is, will money managers embrace Bitcoin? Laffer says asset managers have told her that Bitcoin could be a boon from balancing their portfolios if it's safe enough. Bitcoin's volatility is a big negative for retail transactions right now, but not for institutional investors, says Laffer. A lot of commodities that funds that used as alternative investments are highly volatile. Oil and coffee prices careen up and down, often wildly. She notes that Bitcoin is the ultimate maverick. Its spikes and values are uncorrelated with trends in stocks, bond, gold, and real estate. And despite its volatility over the past decade, Bitcoin has outperformed those rivals in total gains. In theory, Bitcoin deserves a place in the basket of alternative assets that are a staple of large, diversified portfolios. Who's most likely to bite? Laffer expects a lot of action from retail brokerage firms, in part because millennials and Gen X's are craving holding Bitcoin as an investment. The brokers are always looking for an edge to attract new customers, and offering Bitcoin can have lots of appeal. As for money managers, Laffer thinks the most likely takers are college endowments and pension funds. They're the ones who are usually in the forefront in investing and adopting new investment ideas. In the past, adventurous, usually crypto-only hedge funds have been the major institutional investors in digital assets. It is likely that the rise of Bakkt will attract more hedge fund players. For example, just this week, Elwood Asset Management, the firm that manages the personal crypto portfolio, billionaire fund manager Alan Howard, a Bakkt shareholder, announced that it's looking to create a $1 billion in portfolios for institutional investments, placing money with a variety of digital hedge funds. What about Bitcoin ETFs or mutual funds from, say, a Vanguard or Merrill Lynch? They're unlikely to arrive anytime soon. Since funds holding Bitcoins are securities, not commodities, they would be regulated by the SEC, and that agency has repeatedly told applicants that today Bitcoin's trading is not protected by adequate oversight. In particular, the SEC has noted that Bitcoin has no price established by a central exchange, making it difficult to establish reliable quotes for newly created securities. On the other hand, if Bakkt acquires gigantic volumes, it would eventually set a global benchmark price as ICE does now for Brent crude. In that scenario, Bitcoin purchased by an asset manager on ICE Futures US might pass the SEC test for packaging Bitcoin into an ETF and mutual funds. So can we shop with cryptocurrency? Bakkt's partnership with Starbucks has led to speculation that its ultimate goal is to bring Bitcoin into the world of retail payments, something that Laffer and Spiker confirmed. The fat fees paid by merchants are just the kind of target they relish attacking. Today, consumers around the globe purchase a staggering $25 trillion a year in goods on their credit cards. The players who process the payments, notably the card providers and bank intermediaries, reportedly charge retailers an average of 2.4 to 2.5 on those purchases. The card companies return part of the inter-exchange fee to consumers in cash back or airline miles or hotel points or other rewards designed to build loyalty. Merchants would love to get control of those dollars to design the reward programs themselves instead of loading customers with miles of points that they may never get to use and may not bind them to the brand. It's likely that retailers will never accept getting paid in Bitcoin, but millennial and Gen X's have shown enthusiasm for Bitcoin and other cryptocurrencies. They are also digital natives, many of whom have never known life without a cell phone in their hands. They're often a lot more comfortable paying with an app than paying with a card if they have one at all. If Bakkt succeeds in unleashing a surge in institutional trading in Bitcoin, the tokens could take on a new role as a highly liquid alternative currency. Folks with a Bakkt app on their cell phones could readily use Bitcoin for purchases from merchants. Bakkt would manage the conversion from Bitcoin to dollars, so the merchant would never see Bitcoin, only traditional currency. According to experts who have compared the transactional cost of paying via Bitcoin versus credit cards, the former would cut the current inter-exchange fee around 75%. Merchants could use those savings to lower prices or design their own rewards and swelling the ranks of its 20-something fans. That moonshot vision will only work if the current moonshot ready for launch takes off. Stand by for countdown. That was a long article, but what we got from that article was a lot of information about where this is going. Bakkt basically makes Bitcoin legitimate. And if Bitcoin's legitimate, that means cryptocurrencies are going to be legitimate. So I think we're going to be paying with our phones in the future very soon. I don't know how soon, but very soon I expect that to happen. Okay, guys? But once again, Bakkt launches today. That was the rundown of Bakkt. You can do some more researches on your own. I'll put the link to both articles in the description below. Go to knockoutcrypto.com. Thank you for supporting our channel. Sign up for the next big crypto report. Also sign up for our trading alerts at knockoutcrypto.com. Once again, go to knockoutcrypto.com. Sign up for the report. Sign up for the trading alerts. There's more information there. Thank you for following us. Thank you for following the channel, guys. I appreciate your support. Share the video, like the video.
In a world of when Lambo, crypto scams, and fake projects, where can you find true value? No time to research cryptocurrency projects. No money for crypto reports that cost thousands and thousands of dollars. Don't feel defeated. Knockout Crypto reports are the answer. Knockout Crypto Reports does the research, saving you time. Knockout Crypto Reports are affordable, saving you money. Knockout Crypto Reports only include the highest quality reports. If you want that Lambo, you need to learn how to invest in the highest quality projects early. Knockout Crypto Reports identifies the highest quality projects early, making you money and saving you time. Go to knockoutcrypto.com and sign up for the report now.